And hello, Nick Bendel. Welcome back to the weekly news segment of the For the Property Investor podcast. How you doing today?
I'm going very well. I'm going to wish you good morning and good afternoon because people could be listening to this at any time.
You never know. And you never know whether we're recording in the morning and afternoon then either. So, let's mix it up and um, and keep people guessing.
There's mysteries from both ends. We don't know when they're listening and they don't know when we're recording.
No. But what's been happening in your world this week, Nick?
Well, an interesting thing that's happened since we last spoke, a buyer's agent has asked Hunter and Scribe, and for those who don't know, my company, Hunter and Scribe, it's a copywriting agency that writes content for property and finance professionals. And we work with a lot of buyer's agents. And we've had a buyer's agent in the past few days ask us to write a guide for them about buying property, investment property through an SMSF, because they say that this is something they're getting an increasing number of requests about.
Yes, and we actually, as property managers, which is what we do here at Leafield Real Estate, all across the country, a good percentage. It was around the 10% mark last time I actually did a calculation, but so it's a good percentage of all of the properties we manage are in self-managed super funds. So it's quite popular, and professional investors do it, but of course you have to seek independent financial advice before you can make that decision. So don't take our word for it.
Absolutely. And have you had anything interesting happen to you since we last spoke?
Oh yes, in the last week we were referred to a real estate agency, a sales agency, and a brand name, a franchised one in Sydney, on the North Shore of Sydney, to be able to be their property management department. So it's not something that we usually do outside of our branding, but it is possible to do. And so it's something where they've got about 30 managements, not enough for them to employ a full-time property manager themselves, but it's something that we can do, help them grow it. Then eventually they might take it over themselves to manage when there's enough, or they might just love us so much that we keep on doing it.
Well, that is such a great offering from the perspective of the real estate agency, because when you've got 30 managements, you're kind of neither here nor there. It's not enough for you to hire someone, or if you do, to make it profitable. Conversely, if you don't hire anyone, traditionally you would then have to say goodbye to all those managements, which in time could be a very valuable source of revenue. So it's fantastic that businesses like this agency are able to outsource it to Leafield and get a white label solution.
Yes, because they still own the asset of the rent roll itself, but we just manage it on an ongoing basis for them. So so that's what's news for us this week. But apart from that, we're still busy with new managements, managing the current ones, and still waiting on that Adelaide license to come through, which will be any day or week now. So stay tuned.
Well, I'm so glad that I was going to say, Owen, I'm so glad we're talking about rentals, because that's actually the subject of our first news story today.
Yes, what's in the news this week, Nick?
Well, first up, rents increasing at an increasing rate. Australia's median rent rose by another 0.9% in February, which was the highest monthly gain since March 2023, according to CoreLogic. That meant national rents rose by 8.5% over the year to February, compared to a recent low of 8.1% in October. Unit rents have been rising faster than house rents in 5 of the 8 capital cities. Owen, do you have any explanation for why unit rents are rising faster than house rents in most parts of the country?
Well, last number of years when rents have been rising quite dramatically, houses are quite often preferred. It's especially during the first couple of years of COVID, where a lot of people were moving away from the inner city, away from units. So house prices did really sort of surge quite dramatically. And then those started to flatten off, and as people moved back to the cities, and of course, with prices rising in general, people are wanting to save money, and they're looking at trying to go for lower price properties, which in general rents with units will be lower priced than houses in general. So very generalizing. So when you compare, within the same suburb, um, and yeah. So that being said, uh, not all rents are rising everywhere.
Mm.
Yeah, this is a median average across the country. Um, but because there are some areas where rents aren't rising at all, and maybe even falling in some areas. But in a lot of the capital cities, they are still rising, but some much faster than others.
So as you say, Owen, some
Some
parts of the country we have rents going backwards, even though the national median might be telling a very different story. Focusing just on the national median, rents have now increased for 43 consecutive months. Do you
Hmm.
see a point at which rents start going backwards? And if so, when might that happen?
Um, Crystal ball is sadly not working today, so not sure when. Um, I can tell you what needs to happen for that to start coming back, and that'll be an increase in supply.
Mm,
That dare we start talking about supply and demand again here, Nick? Um, it's So that's what needs to happen for rents to start coming back. But we can see that in areas where there had been a high demand in the past, and now that's petered off, like in regional areas or in outer suburbs of the major capital cities, and surrounding the major capital cities, where a lot of people have gone back to the office, so they need to go back to the city for living,
mm.
and because that's their preference. Then or their boss's preference, I should say. And so and that's what would have had an effect on rental properties, rental prices with units as well.
So it sounds like at a national level, at least, rents are going to keep rising for the foreseeable future. There's something I want to quickly run by you. One theory I've heard for why rents have increased so strongly since the pandemic is that there's been some catch up for the weak rental growth that occurred before the pandemic. Is there any truth to that theory?
Um, an element, yes, yes. If we And it's not as if rents were sort of plateaued everywhere or even going down. It's relative in comparison to in terms of the increase in values of property. So, if you look at the years of 2016, 17, 18, or maybe more like 2015 through 16, 17, when property prices were going up quite dramatically. And then we had the Royal Commission, the Banking Royal Commission, come through and sort of knock that on its head. Um, we had that boom in property prices, and then once the pandemic hit, and everyone thought the sky was going to fall, and then we had another boom in property prices as a result. It's Rents didn't grow nearly as fast as what property prices did.
Mm,
So if you're looking at it purely from an investment point of view, your rental return, especially in the major capital cities, and especially in Sydney, the rental returns, even though rents have gone up dramatically, and it seems like it's ridiculous money that you need to pay to be able to rent a property. Um, it still, in comparison to the value of the property, it's not a great investment.
mm.
In fact, it's still a hell of a lot cheaper to rent where you want to live, especially if it's close to the city, especially in Sydney, than to try and buy that property. Um, and just looking at a purely cash flow point of view.
Well, let's shift from the rental market to the sales market for our next news story. 40% of buyers expect prices to rise, 10% of buyers expect prices to fall. There's been a significant increase in the share of buyers expecting prices to increase. Between July 2023 and January 2024, the share of buyers expecting prices to increase in the following 6 months rose from 28% of buyers to 40% of buyers, according to PropTrack. The share of buyers expecting prices to fall declined from 18% to 10%. And the share of buyers who either were expecting prices to remain stable or didn't know what to expect was largely unchanged. Owen, why has there been a significant increase in the share of buyers who were expecting prices to rise?
Um, the major contributor would be interest rates, um, and as well as the fact that people aren't losing their jobs. There's a big expectation when interest rates are rising. It's just like, oh, if rates are going to rise. What happens if I lose my job? There's all that uncertainty, and when a rate rise is going to stop. And we haven't had a rate rise for quite a few months now, and it seems like the sentiment is that, and everyone believes that rates are going to stay on hold for quite a few more months, and the next move will be down. When that happens is another thing, but and also probably more people are feeling positive with about property values because of the tax cuts that will be coming
Mm.
in 1st of July. So I guess it breeds a more positive sentiment in the market. All of those contributing factors, and people have a more positive outlook on prices going up. And it's so we won't know until that happens. But yeah, that just shows where the sentiment is in the market.
I'm wondering if more buyers expect prices to rise, can that influence buyer behavior and end up becoming a self-fulfilling prophecy?
Absolutely. Just like when the RBA comes out and starts talking about rising rates without actually doing it,
Mm.
it's like having a uh, it's like having a half a rate rise without a rate rise. It has that dampening effect, and the same thing happens when they start talking about cutting rates at some point in the near future, but it has the same sort of effect, which is probably what's happening now, which is what I was just talking about. People start going, oh, well, property's probably going to start rising again as soon as rates come down, which is what's going to happen next. And so they become not as worried about values going down or not. So it's so it does work both ways.
And I'm wondering if I, as a buyer, think prices are rising or about to rise, does that mean that I'm not going to negotiate as hard? I'm going to try to move as quickly as possible because the longer I delay, the more expensive property is going to become.
Yes, there can be that FOMO effect, um, and that starts to kick in. Um, but the same thing was happening when rates were rising.
Mm.
People were still desperate to get in, but they were desperate to get into the market before the next rate rise, because then they might have been priced out of the market because they wouldn't have been able to borrow as much. So, but every rate rise did knock people out of the market. So it did end up having its desired effect at the time.
That's a very nice segue to our final story. Banks restricting high debt lending. The
Mm.
share of high debt home loan lending has fallen for 8 consecutive quarters, according to data from APRA, the banking regulator. In the December 2021 quarter, a record 24.3% of all new mortgages had a debt-to-income ratio of 6 or higher. But by the December 2023 quarter, only 5.6% of new mortgages had a debt-to-income ratio of 6 or higher. So clearly, lenders are making it harder for borrowers to qualify for high debt loans. Owen, I need your take on this. Why are lenders being more cautious with their lending practices?
Lenders know that we're at the top of the interest rate cycle, and they also know when there are like any market change, it's always the top end of the price brackets that lead that change. And because if you're at the bottom of the cycle and you're waiting to see whether or not property prices are going to go up again, just look at the top end of town, and if there's a lot of good activity there, then that'll always filter down. And it happens in the reverse as well. They're obviously wanting to restrict their risk, the banks, that is, and the lenders. If they restrict those higher borrowing amounts and those higher leveraged amounts, which is what this is specifically talking about with the debt to income ratios, then that'll lessen the risks.
Okay, so how does, are you able to elaborate on that? How does a reduction in high debt lending affect the property market?
Um, well, I mean that's a bit of a different question. High debt lending itself can affect the property market, where it's usually they would be with the higher price properties if we're talking about higher values, but here we're talking about the higher debt to income ratios, which you would expect to be in the higher amounts as well, but not always, not necessarily. So how does it affect the property market? Well, it's usually those types of people that are taking more risk, because they're obviously taking more risk by having a higher debt to income ratio. And so they can be market leaders quite often. And so this is another way of the banks in them protecting themselves. They also have a dampening effect on the property market by not letting it get away from itself as well. So it might be something that APRA, the regulatory authority, would probably keep an eye on as well, and be making sure that the banks don't do too much of that high income, high debt to income ratio lending. And so that's where banks can have a positive effect on not letting the markets get away from themselves, and at the same time protecting themselves, and quite potentially protecting the borrowers.
The reference to APRA is interesting. So we've been talking about how over the past 2 years there's been a reduction in lending with high debt to income ratio, but these things tend to move in cycles. At some point, are things going to reverse? Are the banks going to loosen their lending standards and increase the level of high debt to income lending that they do?
Oh, no, without a doubt. And when the handcuffs get loosened, and the market, inflation gets reined in, and interest rates come down a bit, or at least become the new norm at these levels, while other things increase, to allow for that to become the new norm. Then yes, the banks will look for opportunities to be able to gain market share, to lend more money to be able to gain more customers, and that'll mean looking at higher, more riskier loans.
Well, today we've covered the rental market, the sales market, and the mortgage market. I think people have gotten value for money.
Thanks, Nick. You're really testing me out here on my experience and knowledge. Yeah.
But you always pass the test.
Oh, thank you. Oh, you're so kind. You're so kind. And but no, it's I enjoy being able to pass this on. Um, and any questions from anyone? Love to get questions. As long as there are questions that you where you're genuinely wanting to learn more about the markets, and how it works, and how we can have a positive effect on the housing market, especially. There's a lot of negative talk out there, especially about property investors in general. And we want to make it clear that without property investors, um, that we would have a lack of housing, and the demand on the public housing system would become overwhelmed. So without property investors, and yeah, sure, there's many property investors who are out there just to make quick bucks and make money for themselves. But for the majority of property investors out there, yes, they're doing it for themselves, but they're also providing a good public service by providing housing for the population that needs to rent for whatever reason.
Couldn't agree more. I think investors have been unfairly maligned in some quarters, and I think governments in general need to encourage more property investor activity, because with vacancy rates at record lows, if we don't, the rental market's just going to get tighter and tighter, which is not what we want as a society.
Absolutely, 100% agree. But of course, none of that can happen without more supply in the marketplace in general for everyone to be able to buy properties to live in, and then buy properties for investment to be able to supply more rental stock in the market for those people who need or want to rent.
Well, thank you,
There
Owen.
we
Great
go.
to chat.
We'll leave it there. Thank you, Nick. We'll see you again next week with the weekly news.